Something strange happened in the silver market, and most people didn't even realize it at first. Prices didn't just fall slowly, they dropped fast, almost like the floor disappeared. In just a short time, billions of dollars were wiped out. Panic quietly spread through trading desks, investment apps, and even retirement accounts. If you own silver, follow precious metals, or just care about where the economy is heading, this story matters to you. And before we go deeper, make sure to subscribe to USA Trending News, because stories like this don't stay in the headlines for long, but their impact lasts for years. It started like a normal trading day. Charts were moving, analysts were talking, and investors were watching their screens, expecting the usual ups and downs. But then, something changed. Prices began slipping faster than expected. At first, traders thought it was just profit-taking, a normal pullback, nothing serious. But within hours, the selling accelerated.
Ow!
Orders hit the market all at once, pushing prices lower and lower.
Ow!
What looked like a correction started to feel like a crash. Many investors were confused. Silver wasn't supposed to behave like this. Inflation was still a concern. Global uncertainty was still high. Demand for physical silver hadn't disappeared overnight. So why was the price collapsing? As fear grew, stop-loss orders were triggered automatically, forcing even more selling. This created a chain reaction, where falling prices caused more selling, and more selling caused even lower prices.
Behind the scenes.
Large institutions were moving fast. Hedge funds, banks, and algorithmic trading systems don't panic like regular people. They react to signals. When those signals flash red, they exit positions without emotion. This time, those exits were massive. Paper silver contracts flooded the market, overwhelming buyers. The price you see on the screen isn't always about physical metal. It's often about paper promises. And when those promises are dumped all at once, prices can collapse in seconds. For everyday Americans watching this unfold, the shock was real. Some had invested in silver as a hedge against inflation. Others saw it as a safe place during uncertain times. Many believed silver was undervalued and due for a rise. Instead, they watched their portfolios turn red. Retirement accounts dipped. Savings meant for the future suddenly felt less secure. News anchors tried to explain what was happening, but even they struggled. Some blamed the stronger dollar. Others pointed to rising interest rates. A few mentioned weakening industrial demand. But none of those explanations fully captured the speed and violence of the move. This wasn't just about fundamentals. This was about confidence breaking. Confidence is everything in financial markets. As long as people believe prices will hold, they usually do. But once doubt creeps in, it spreads fast. Social media filled with worried posts, forums exploded with arguments. Some said this was manipulation. Others said it was the start of something much worse. Fear has a way of making every rumor feel real. What made this moment even more unsettling was timing. The U.S. economy was already under pressure. Families were dealing with high grocery prices, expensive gas, and rising rent. Credit card debt was climbing. People were stretched thin. For many, silver wasn't just an investment. It was a sense of security. Watching it fall felt like losing another layer of protection. As prices dropped further, margin calls began. Investors who borrowed money to buy silver were forced to sell to cover their losses. This added even more selling pressure. It became a vicious cycle. The more prices fell, the more forced selling occurred. The faster it happened, the harder it was to stop. Some seasoned investors stayed calm. They had seen crashes before. They knew markets can overshoot on the downside just like they do on the upside. But even they admitted this move felt extreme. And the silence from regulators was noticeable. Meanwhile, physical silver told a different story. Coin shops reported strong demand. Online dealers showed low inventory. Premiums on physical silver actually increased, even as paper prices fell. This created a strange disconnect. On screens, silver looked weak. In the real world, people were still buying. This raised an uncomfortable question. Is the price we see truly reflecting reality, or is it being distorted by paper trading and leverage? For years, critics have warned that the silver market is fragile, built on far more paper claims than actual metal. When stress hits the system, those weaknesses become visible. The average American, all of this can feel overwhelming. You're told to invest wisely, diversify, and think long-term. But when markets behave like this, it's hard not to feel helpless. One day your investment looks safe. The next day, it's sinking fast, and no one seems to have a clear answer. As the dust began to settle, analysts rushed to update their forecasts. Some lowered price targets. Others said the sell-off was overdone. A few quietly admitted they didn't see this coming. That's the truth about markets. Even the experts don't always know what's about to happen. This moment became a reminder of how quickly sentiment can change. Just weeks earlier, silver was being talked about as a strong opportunity. Now it was being described as risky and unstable. It's the same asset, two very different narratives. For viewers of USA Trending News, this story isn't just about silver. It's about trust. Trust in markets, trust in systems, and trust in the idea that prices reflect reality. When that trust breaks, volatility follows. Some investors chose to sell and walk away, accepting their losses. Others held on, believing this was a temporary shakeout. Few even bought more, convinced that fear had created an opportunity. Each decision came with uncertainty. There were no guarantees, only risks. As days passed, the headlines moved on. Another story replaced this one, but the impact didn't disappear. The charts still showed damage. Confidence was still fragile. The questions raised by this crash remained unanswered. What happens next depends on many forces. Interest rates, economic data, global demand, and investor psychology all play a role. Silver could stabilize, it could recover, or it could face more pressure. No one can say for sure. What is clear is that the illusion of safety was broken. For everyday Americans, the lesson is uncomfortable but important. Markets can change fast. Assets that feel safe can become volatile, and diversification alone doesn't remove risk. Understanding what you own and why you own it matters more than ever. If you're watching this and thinking about your own financial future, you're not alone. Millions are asking the same questions right now. That's why staying informed is critical. Not the hype, not the fear, but the full story. At USA Trending News, we break down these moments so you can see beyond the headlines and understand what's really happening beneath the surface. If this story helped you see the silver market in a new way, make sure to like this video, subscribe to the channel, and share your thoughts in the comments. Do you think this was a temporary crash or a warning sign of something bigger? Your voice matters, and we'll be here to keep you informed as this story continues.